and this is the Money Show with me, Karanya. And today we have a lots of exciting things lined up on the show today. First up, of course, we'll be discussing filing your taxes. 31st March deadline is nearing, and in order to avoid making a last-minute return filing mistakes, we'll get you an expert to answer all your queries and also to help you advise as to what you should be doing, given that there's just about 3 to 4 weeks left to file your taxes. We'll also talk to you about investing and saving your wealth smartly with TMS, and should you stay invested in debt funds? That's something we will be discussing through the course of the show, along with the Spend with TMS segment about wherein we'll talk to you about investing in an auction property. White goods also stare at price hikes given the disruption on back of coronavirus. So we'll talk to our reporter as to what are the segments, what are the items and products that are poised to see a price hike at the end of the show. But for now, let's kickstart the show by talking about the taxes. Of course, the deadline is just a few weeks away now. So in order to take last minute steps, what are the things you need to watch out for, and how can you fasten and quickly file your returns? We'll speak to Mr. Jayant Pai. He's the CFP and Head of Products at PPFAS. He's joining us right here in our studios to talk about filing your taxes, and he will be answering your queries through the show as well. So keep dialing in and tell us what your queries are. Jayant, hi, thank you so much for joining us here in the studios today. When it comes to filing taxes, especially when you're on a tight deadline for about 3 to 4 weeks, what are some checklists or some things that you need to be very careful about?
Yeah, so actually this deadline is not about filing as such. It's only the end of the year. So salaried people have already got their summons from the HR guys, and we already are, many of the employees have already submitted all the requisite documents to their HR departments. But there is still one thing left. You have to pay your final installment of advance tax. So many of the people who are liable to pay that, they shouldn't miss out on the March 15 deadline. Apart from that, in case you haven't submitted something to your HR, it's still not too late, because you can still make the requisite investments and then add them to the depict them in the return when you file it by July 31st. So it's not too late for anything, but in general it's always good to do it in a steady manner rather than wait for the last month.
Okay. It's also the belated filing of ITR. March 31st, 2020 is also the deadline for the last date of ITR for FY19 as we know it. So if a person misses this deadline also, what happens?
So one thing is that you will not be allowed to offset any losses. That's one. Except income from loss from house property. That's the only thing that you will be allowed to carry forward. Otherwise, loss from business or any other losses, including capital losses, will not be allowed to be carried forward. Besides that, even though you are not late as such, you may still have to pay a penalty of around 5,000 rupees if the income tax officer demands it, because you are already late by some time. So although you are still eligible to file your return, you may still have to pay that amount.
Okay. All right. And what happens if somebody makes a mistake, let's say, in their filing of returns, especially for the belated filing, because this is the final deadline for that. So if there's any error, how to rectify it? What is the procedure?
One error people often make, I mean, it's a very rudimentary error, but it's in wrongly mentioning your PAN. So that is a serious error. So you just got to take care that you don't mention the wrong PAN or you don't fill up the wrong form. Filling up your tax return the wrong form is sometimes quite fatal, because you are allowed to change it, but it's very difficult to rectify that. It's better to just take a little bit of care right now, and rather than face the consequences later on.
Okay. What essentially are some precautions to take while filling your form, filing your income tax? Because there are a lot of first-timers out there. Many of us go to a consultant, go to a CA, but those who are doing it themselves, what are some precautions that need to be kept in mind?
Yeah, like what I mentioned, the form is critical, because there are several forms and you got to choose the right form for the right return. And so apart from that, the PAN that I mentioned, and you just got to ensure that you know uh, display the right income under the right head. So one thing is things like people may make a mistake, like capital gains might be put under other income, or such things. So the list is long, so I cannot enumerate everything right now. But I think you just got to be careful. And seriously, today you are having a lot of these online options which cue you. So if you are making a mistake, they will give you a hint that you are going wrong somewhere.
Okay.
Despite that, if you still need some human help, there are these tax preparers there and several others. So sometimes it makes sense to pay a small amount and get it done through a person who is capable.
You know, we often hear from our seniors, our elders, that you should file your taxes early. What are the benefits? I mean, is there any way that we stand to benefit? Of course, other than that, we don't have to worry about that deadline looming large on our heads.
No, I mean, there's no special benefit to filing early. In fact, people used to say that if you file it too early, you come into the crosshairs of the income tax guys.
Oh, okay.
So that's what we used to say when we were young. But there's no special benefit but it's important that you complete everything before March 31st.
Right.
That is more important rather than the July 31st thing.
And typically when we are declaring our investments, a lot of, especially the salaried class would do that ahead of this deadline and they, to their employers, right? So what are some last minute, for those who have not invested anywhere so far or who have not yet thought about it or are clueless perhaps, what are some investment options that they have for last minute in order to save on their taxes?
Yeah, so in general, last minute is not a good way to go. But in case there's no other option, so I would say don't look at investments at all. First, look at your expenses, because there are several expenses which are actually eligible, for tax deduction, and we don't know it. So school fees is one. So although we know that life insurance and interest on home loan, all these are there, but simple things like school fees, they could help you. Meet that ATC limit, because today school fees is pretty heavy. So that itself could help you. So look at your expenses first and integrate your tax saving with your expenses. So you don't have to make special investments unless it's absolutely required.
Okay. Let's also understand some of our viewer queries and try and get your help for that. First up, we have a query from Ravi Teja. He says he's just moved to Malaysia for employment. So first question is, should I convert my savings account to an NRO soon if that's going to have any impact? If yes, what should he do with his investments in mutual funds and stocks done from his saving account? And for the last 4 years, he's been saving or rather investing in mutual funds using that account that he had here in India. So should he declare the change in his residency, which can only happen offline?
Okay. At the outset, I must congratulate you in case you have got that dream job, in Malaysia. So there are some hygiene factors that you have to take into consideration. It is very vital that you first inform your own bank that your status is changing, and that's not a big task because your existing savings account will be converted into an NRO account, which is a rupee account. And doing this will actually helps you in many things. For example, once you are there in Malaysia, you may still be earning some things here. So all of those incomes could be domiciled under this your old savings account, which is now an NRO. Apart from that, you can either assign someone to operate it or do it on your own online from there. And also, since we have a double taxation avoidance agreement with Malaysia, you don't have to pay tax on your Indian income over there and vice versa. So that's the first thing. Second is, since you're in Malaysia, Malaysia is not one of the banned countries, nor is it US or Canada, which has its own complications. So all you have to do is inform your respective mutual fund that you are moving to Malaysia, and get your KYC, and there's a thing known as FATCA. Get these two things done afresh, and that's all. And also your NRO account details, because that's the account through which I suggest you continue your investments in lieu of the old savings account. So not too many things to be done, just you got to check a few boxes.
Okay. We have a live caller joining us right now on the phone line, so let's bring him on board as well. Senthil is here with us from Bangalore. Hi, good evening. What's your query?
Hi, good evening. Thanks for the opportunity. My question is related to long-term capital gain on a property sale.
Okay.
The scenario is like this. My overall outgo of the apartment purchase happened in 2013 is around 65 lakhs. This is something that I paid the builder, whereas sale deed is actually much lower than the actual expenses for me. Right now, when it comes to selling this apartment, let's say if I do it right now, I know that I'm eligible for this 20% indexation benefit to really bring down the overall, purchase, the impact of the tax outgo.
Yeah.
Right now, question now is the acquisition cost. There is a little bit of ambiguity in terms of how really go about calculating that. Question number one is related to the actual date. It could be some places they say that it could be a possession date or it could be the actual sale date. So that's one question number one. Question number two is can we also consider the expense or let's say whatever I paid to the builder rather than the guidance value, which is at a much lower level, right? So basically, there is an option to include expenses like interiors and carpentry work, etc. But my question is, can we not really take the actual stuff that we paid to the builder rather than the sale deed cost, right? That will actually significantly reduce the tax outgo. There's a bit of ambiguity there I would like to clarify.
Right, Jayant, a very detailed query for you. So over to you. Tell us what he can probably do with it.
Actually, I mean, you're using the word sale deed very often, but from what I gather, you're actually talking of the purchase cost. I mean, correct me if I'm wrong. So, but let's take it in a generic sense. So, one is there's always this question as to which date should be treated as the date of acquisition. So, whether the date of signing the sale deed or the possession or the allotment letter. As a matter of abundant caution, I would suggest to take the latest one, whichever it is, which most likely will be the possession date. So that is one. So in case your possession date cost is 100, and today say after whatever 7 years you are selling it for 200. So your gain after indexing the 100 rupees will be, say, suppose 130. So your gain will be 70 rupees. That's one. Second, you're talking about the guidance value. So today, with real estate prices, not moving anywhere for the past few years, often the guidance value is higher than the actual proceeds that you get. So unfortunately, there is no option. You will have to choose the guidance value for the capital gains purpose. So I believe this answers the things. And the last one is about the home improvement. So home improvement cost is definitely allowed to be added to the cost, but I'm not sure what you mean by some additional charges paid to the builder. I would like some more clarity possible on that. But failing that, I would say that don't push the envelope when it comes to all this. It's better to pay a little extra tax rather than attract undue attention from the taxman.
All right, Senthil, I hope your query was adequately addressed. Thank you so much for calling us. We have another live caller joining us right now on the show, Jitendra Singh. He's with us on the phone. Hi, what's your query?
मेरा क्वेरी है,
हाँ.
मेरा इनकम जो है टैक्स ब्रैकेट में नहीं आता है,
ओके,
लेकिन मेरा डेट म्यूचुअल फंड में इन्वेस्टमेंट है,
ओके,
इसका रिटर्न भी ऐड करने पर टैक्स ब्रैकेट में नहीं आता है,
ओके,
तो क्या हमको ITR भरना होगा?
ओके. Jayant, if you could take that in Hindi as well. जितेंद्र का क्वेरी है कि टैक्स ब्रैकेट में नहीं आ रहा है उनका इनकम डिस्पाइट एडिंग हिज डेट इन म्यूचुअल फंड, तो क्या करना चाहिए उन्हें? फाइल करना चाहिए इनकम रिटर्न इररिस्पेक्टिव ऑफ दैट?
जितेंद्र जी, आपने ये नहीं कहा है कि आपने कौन से प्लान में निवेश किया है. तो अगर आपने ग्रोथ प्लान में निवेश किया है तो आपको कोई तकलीफ नहीं आनी चाहिए, क्योंकि आप जब भी ये यूनिट्स बेचेंगे तो अगर आपने 100 रुपये में यूनिट्स लिए हैं NAV पे, 100 के NAV पे लिए हैं, और अगर आप 120 में बेचोगे तो ये 20 रुपये का जो मुनाफा है वो आपको वो उसके ऊपर आपको कोई टैक्स नहीं भरना पड़ेगा, क्योंकि आप टैक्स ब्रैकेट के ऊपर नहीं हो। तो 2.5 लाख के नीचे अगर आपका इनकम है तो मैं ये आपको सलाह दे सकता हूँ कि अगर आप जो भी म्यूचुअल फंड में निवेश करें वो हमेशा ग्रोथ प्लान में निवेश करें, क्योंकि अगर आप डिविडेंड प्लान में निवेश करते हो तो जो डिविडेंड डिस्ट्रीब्यूशन टैक्स जो अभी तक लग रहा था वो वैसे भी लगते जाएगा, क्योंकि उनको मालूम नहीं कि आप कौन से टैक्स ब्रैकेट में हो। तो इन जनरल इट ऑलवेज मेक सेंस कि आप ग्रोथ प्लान में निवेश करो एंड फिर आपको कोई टैक्स लागू होगा नहीं।
ओके जितेंद्र जी, थैंक यू सो मच कॉल करने के लिए। आई होप जो भी एडवाइस दी है जयंत जी ने वो आपके लिए हेल्पफुल होगी। Let's move right on to an email query next. SD Grupala Krishnan has written to us. He says some private insurers provide basic premium cover of 5x in the annual premium. There's also a rider wherein the assured gets an accidental death benefit of certain amount for a much lower premium. While the basic insurance cover is less than 10x the premium, but when put together the rider it is about 10x. Are these policies exempted on maturity? Could you help him on that?
Yeah, thanks for raising this. I mean, this is a kind of a maneuver used by insurance companies to get around this the clause regarding the ratio of premium to sum assured. This was brought into effect a few years ago. So the current rule is that your premium should be a minimum of 1/10 of the sum assured. So suppose your sum assured is 10 lakhs, your premium should not exceed 1 lakh. But what is happening, so this was done to avoid this of insurance policies masquerading as investment. They were basically investment policies, but they were being put forth as insurance in order to get a tax benefit. So now the rule is that if you want full tax benefit under ATC, the minimum gap between the premium and the sum assured should be 10 times. So in your particular case, I think the gap is only 5 times. So what these people do is they add a rider. So in this case, I think you mentioned the death benefit, accidental death benefit. But accidental death benefit only kicks in only if you expire due to an accident and not otherwise. So if you expire due to natural causes, your family will not get that. So that's why the taxman as well as taxman does not take this into account because it is not a base case. So only the base sum assured, which in this case is 5 lakhs, is treated as the eligible sum for your tax benefit. Right. So I don't think you should fall for such sort of hooks, and just ensure that your basic sum assured is 10 times.
Okay, I hope he's taking note of all that. Moving on to our next caller who's joining us live, Nikhil from Kochi. Hi Nikhil, what's your query? Okay, I think Nikhil has got on a bad line with us. We'll try to reconnect with him. Meantime, I'll just read out the next email that we've received. It's from Vivek Sundar. He wants to know if the government has withdrawn the grandfathering clause on long-term equities. What is your answer to that, Jayant?
Yeah, so this grandfathering clause was brought into effect in I think 17-18, FY 17-18. When they started levying capital gains tax on equity shares. So prior to that there was no capital gains, long-term capital gains. So in order to prevent any injustice to existing holders, what they did is the budget was announced on 1st Feb 2018. So what they said is that all capital gains earned up to 1 day prior to the announcement of the budget, that is Jan 31st, would not be taxed. So in other words, your cost of acquisition went up by that much. So suppose you had bought something for 100, say 10 years ago, and on Jan 31st, 2018, suppose it was 150. So your cost basically comes up to 150. And suppose you sell those shares, say you had sold it today morning for say 200. So it's basically 200 minus 150 rather than 200 minus 100. Okay, so this was just a kind of a comfort which was given to equity shareholders so that they did not have to pay outsized amount of capital gains. So that is still valid. So grandfathering as such was just a one-off, but it is valid forever because your cost has gone up to the price prevailing on Jan 31st, 2018. So it's still in effect. Yeah.
Okay. All right, last query then for the day. I'll just read out the email real quick. It's from Narayan Swami. He's given a brief introduction about himself. He's a senior citizen holding shares in a company in DMAT form. Wants to know if tax will be deducted at source from dividends declared by the company if the dividend amount is more than 5,000. If so, is he supposed to submit a Form 15H to the company or a depository participant to receive the dividend without TDS? What should he do?
Yeah, so Form 15H is submitted so that the company does not deduct tax. So in this case, it is always better to submit this form to the respective company and not to the depository participant, because the depository only maintains a record of the shareholding and the purchase and sale of shares. So as a matter of caution, it is better to submit it to the company and not the depository, and that too only if you feel the dividend that you earn will exceed 5,000. Otherwise, there is no need.
Okay, all right. Well, with that, I think we're out of time on this segment, so we're going to wrap it up for now. Thank you, Jayesh. I'm sorry, thank you, Jayant, for coming in and helping our viewers out, and for sharing your tips, your perspective on just ahead of the deadline of 31st March. Thank you once again. We're slipping into a short break here, but when we come back, we have lots more lined up, so stay tuned.